So we've done the debtors journal. What we now need to do is the debtors allowance journal and the creditors journal, and then the creditors allowance journal. All right. So let's shift over here. We can. Now we only have 2 transactions for the debtors journal. The first one happened on the 15th. Okay. 15th. Let's see there. Debtors allowance journal. So there, it's that transaction where corrected overcharge, DCN 140. Okay. So again, here we just put 140, and again, in the debtors, it's a VAT inclusive amount. Okay. Then, can you see something interesting though? This time we said input VAT. We didn't say output VAT. Somebody tell me why that's the case. Because when we look at the debtors journal, what we just did, it was output VAT. Why do we have input VAT there? And remember what I told you guys in my class? So this is for your benefit as well. I always welcome guessing. Okay. Because I'm not just here to talk to you guys. All right, so as much as you're here to learn from me, I'm also here to learn from you. And if we're wrong, obviously we'll guide each other to the right answer, or the right chain of thought. So why do we have input that instead of output that in the debtors allowance journal? Is this correct? To give you guys a little bit of a hint, what is going on in the debtors allowance journal? Remember in the debtors journal, we're saying somebody is buying from us on credit. In the debtors allowance journal, what's happening? Yes? It's returns. So, and rebates. So if somebody said, okay, bought this stuff from you, 1,000 Rand. Okay, you sold it to them on credit, 1,000 Rand. Then they come back 2 weeks later and say, actually, I want to return 200 Rand, or in this case, let's say 140 Rand worth of what you sold. Remember when I first recorded the transaction, and let's actually, when I first recorded it in the debtors journal, right? I said there's output VAT that I owe to SARS on 1,000 Rand. All right. So now this guy comes back to me and says, hey, I'm returning 140 Rand worth of what you sold to me. That output VAT that you recorded in the debtors journal now needs to be reversed. And the only way that we can reverse output VAT is by doing an input VAT transaction. Does that make sense? Because remember, output VAT is what we need to pay over to SARS. Input VAT is what SARS needs to pay over to us. So can you see why we do it that way? Why we say, okay, if I want to reduce my output VAT, let me just increase what SARS needs to pay over to me. Because remember in the VAT return, it's the total of our output VAT and input VAT. And then what are we also trying to find out in the VAT return? Who needs to pay who? If I owe SARS more than what they owe me, in other words, if there's more output VAT than input VAT, I need to pay SARS. If there's more input VAT than output VAT, then SARS needs to pay me. Okay, does that make sense? So whenever you want to reverse output VAT, you do an input VAT transaction. And that's why we have input VAT there. It's the same principle. If ever we want to reverse input VAT, we reverse input VAT by doing an output VAT transaction. Okay? All right. Cool. You'll see a lot of that soon enough. Right. So, again, we simply say, okay, what is the VAT amount here? 15 divided by 115 and times 140. Okay? And that's what we get. So that's what we're going to plug in over here. Right. And then obviously, 140 minus this, we're going to get, that's now our sales. Okay. This, you could also call this sales returns if you wanted to, because it is sales returns. It's what the customer is now returning back to us. Okay, 7.4. Okay, right. And then obviously now we need to calculate the cost of sales. And you see, they didn't, in this transaction, did they give us, they didn't give us the markup or the gross margin. So what do we need to do? We need to then look at the transaction, and there you see it says the third. All right, and we see it was with A Apple. So we need to go back to the third, and you see there the markup was 25%. Okay, so then we know, okay, that's the markup that we then now need to use to calculate our cost of sales. So since it was markup, we know that cost is 100%, and we know that our selling price is then obviously 125. Okay, you can actually refer back to this point if you want to. All right, guys, I advise you do that because these calculations can get complicated or confusing. I think it's easy for you to slip out or confuse things quickly. All right. All right, so there we go. There's our cost of sales. Done with the first one. Let's go to the second one. Second one happened on the 17th. 17th, client returned damaged goods. So in the first one, can you see it was an overcharge? This time, the client is returning goods. I actually like this exercise. All right, 990. All right, so that's the value of the goods he's returning. So 990, plug that in there. Again, we say to ourselves, okay, what is the VAT amount? 15 divided by 115, okay, times the 990. Okay. So that's the VAT amount. Okay. And then quickly, what is the VAT exclusive? We can just say 100 divided by 115 times 990. Gives us 860. So we know we plug in that VAT exclusive amount into sales. Okay. And then finally, we want to calculate the cost of sales. Again, we say to ourselves, okay, this transaction happened on the 7th. On the 7th, what do they tell us? Gross margin, 20%. So we want, yeah, gross margin, 20%. So we then say, okay, the model there then, I'm just going to write it on the side. Cost plus profit equals to selling price. So this is gross margin. So selling price is 100. Okay. And then they said 20%. So profit is 20%. And therefore cost is 80. Okay. So what we want is 80. So 80. But what we have though is 100. Okay. Times that amount there. Okay. And there is our cost of sales. Okay. Round that up. All right, guys. So I said this in the past. If anyone has any questions, please do ask. All right. Better for me to take my sweet time. All right. To the stuff. Not that I'm rushing per se today, but just want to make sure that we're all on the same page as to what are we doing, why is that amount there, etc, etc. Okay, so that is the debtors allowance journal. Okay, then we can move on to the creditors journal. Remember what's going on in the creditors journal? We are making purchases on credit, right? And it could be of anything. Okay, could be of anything. Okay, So let's get into it. Okay, no problem. So first transaction that we had there happened on the 3rd. We purchased trading inventory for 29,000. Okay, so we just go to creditors column, 29. And can you see something here? Again, we don't have a bank account. We have a creditors, but guess what? The creditors again is the VAT inclusive amount. Okay, so 29,790. Okay, what is the input VAT there? We quickly say, okay, 15 divided by 115 times 29,790. Okay, so there's our VAT amount. Okay, and then we obviously want to calculate. This was for inventory, yes? Yes. Just double checking. Yep. It was for, yeah, it was for inventory. Okay, no problems. Uh, 29790. Okay, so that's our VAT exclusive. Okay. 3.5. Okay. Done. Fortunately, there we don't need to calculate cost of sales, obviously, since we're not selling anything here. So we can go to the next transaction, all right? And there, that happened on the 13th. Again, we bought inventory, right? It was for 11,000. Okay, and bear in mind, guys, sometimes they actually tell you this is the VAT exclusive amount, like we saw in other exercises. So again, you need to be comfortable with your VAT. Okay, so don't just say every time you see an amount, you just assume it's the VAT inclusive. Okay? You must know whether this thing is the VAT inclusive or not. So 11,815. Okay, and we want, let's go with the VAT exclusive this time. Spice it up. Again, that was for inventory, so we're putting that under inventory. Then to get our VAT, we know that's just the difference between inclusive and exclusive. 815. Okay. And that's going to be 9. All right, no problem. Next one. On the 15th, trading inventory bought. Okay, here we have 35,600, 10% trade discount. Okay, so what are we supposed to do, guys? How do we record this? Somebody tell me. Should we use the 35,600? What must happen? Did we pay, are we going to pay 35,600? We're not, because it says less a 10% trade discount. So in other words, we're paying 90%, right? So then we say 35,600 times 90%. Since we have a 10% discount, I'm just going to say 0.90. And there we go. So that's how much we actually owe this person that we bought these goods on credit from. There we go. That in there. And again, we then just say, okay, what then is the VAT exclusive amount? Okay. All right. Okay, that should be 87 rounded to 2 decimal place. And then we just want to quickly deduct. This is 32,040. Okay, to get the VAT amount. Plug that in there. Okay. Then the last transaction that we have there happened on the 24th. Purchased equipment. Can you see? This time we purchased equipment. Okay, and that was for how much? 25,600. Okay. So we might as well just quickly calculate the VAT and VAT exclusive. Forgot a zero over there. And there we go. Let's do this actually. Okay, so here we know it's going to be 25,600 because we know under creditors we put the VAT inclusive, and then here the VAT amount is 3,339.13. Okay, and then remember this is not inventory, so we can't put it under inventory. We have to go to sundry because we know there's no equipment column. Okay, and that's when we can plug in the VAT. Okay, and round it up to 2 decimal places is going to be 87. Okay, all right, and there's your creditors journal. Okay, you want to take a photo? Let me just, yeah, I think these calculations for that. So you people who take photos, do you check my YouTube videos? Since you got the answers there. Because this is all going on YouTube, eh? Okay. Just letting you know. Just letting you know. Okay. So now we go to the creditors allowance journal. Okay. And now remember what's going on here? We are returning goods or requesting a rebate from our suppliers. Okay. Or maybe we were overcharged. That's the other thing that could be happening over there. So then we say to ourselves, okay, fine. Where did we have creditors allowance journal transactions? And again, this is where you're really going to start to enjoy the fact that you listed, because now you just go, where do I have CAJ? Where do I have CAJ? First one was on the 25th. Go to the 25th. Returned damaged equipment, 4,000. Okay, cool. No problems. 4,000. Okay. Right. Again, that's the VAT inclusive amount. Okay. So that's fine. And then here, I forgot to erase these calculations, but we are here now. Okay. So again, just want to calculate the VAT there. So 15 divided by 115. Okay. So there's your VAT amount there. Okay. By now, I really hope we're comfortable with these calculations. Okay. And then obviously, then what were we buying there? That was equipment. So we go to sundry and we plug that in right there. It's going to be 6. Okay, go to the next transaction. What's going on over there? On the 28th, oh, I need to flip the page. On the 28th, we were overcharged. We need to correct that. And that was for 415. Okay, cool. Again, then we need to calculate the VAT amount. And there, can you see, it doesn't tell us what we were overcharged for. Is it inventory? Is it equipment? What were we overcharged for? All right. We then now need to go to the date on the 13th, and what does it tell us? I heard you guys say. It's inventory, right? Okay. So then we know this is going under the inventory column. All right, so let's quickly throw in this that amount here. And can you see here what we have? We have output VAT. Okay, maybe let me just address that in a second. Let's first finish here. And then let's put this amount under inventory. 87. Okay. All right, cool. So we're done now with the Creditors Allowance Journal. Now this is what I wanted to mention. If we look at the Creditors Journal, we have input VAT. And that makes sense because we are buying something in the production of our income, okay? So whenever we incur that, because we only trade with that vendors, that's what they said in the top of the question, we know we're going to claim our input VAT wherever something is obviously standard rated, okay? Now guess what? We have input VAT there, but when we look at the Creditors Allowance Journal, we have output VAT. Why? Because when we were buying this stuff, we were saying, SARS, we're buying something to the value of 29,790, and we're claiming input VAT based on that amount. All right, you must pay us input VAT based on that amount, or refund us VAT based on that amount. Then we turn around and say, hey, actually, we'd like to return some of that. Or maybe I should use the equipment example. Here, we bought something worth, this is supposed to be 25,600. Okay? We bought something worth 25,600. All right? Therefore, our VAT was 3,339. But now we're turning around and saying, actually, we're returning equipment worth 4,000. So in effect, what we've actually purchased is worth 21,600. Does that make sense? So SARS is saying, hey, hold on. You then need to reduce the amount of input that you're claiming from me because you returned some of this stuff. Okay? Therefore, we then now need to say, oh, okay. To rectify that, we're going to give you output that so that it all balances out. Okay? Just reiterating that same thing, just so that it hits home. Okay? But I'm sure by now you guys are comfortable with that. Okay, so we've dealt with the Debtors Journal, we've dealt with the Debtors Allowance Journal, we've dealt with the Creditors Journal, we've dealt with the Creditors Allowance Journal. Now we deal with the General Journal. And this tends to give my students a lot of headaches. Okay? Tends to give my students a lot of headaches. But the problem is, not that it's tough, it just requires practice. Okay? So please, guys, please put in the time to go over this. I want you, by the way, to do homework, exercise 18. I want you guys to do exercise 18. The answers for that are on. I've already uploaded the exercise on YouTube. So just look, Unit 5, and then look for under description, exercise 18. All right, it's a shorter exercise, but it's pretty much what we've done now. Okay, so please go and do that for homework in addition to the ICE tasks and stuff. Sorry, not exercise 18, exercise 20 in the Workpack. Exercise 20. Sorry, my bad. Okay, cool. So now we need to do the General Journal. Okay, we now need to do the General Journal. So let's quickly do that. Where did we have GJ? We had it on the 6th. All right, when the owner withdrew merchandise. Okay, so here, this is drawings, but it's drawings of something tangible. So it can't go into any of the other journals. Okay, now, so which two accounts are affected is drawings and merchandise. Okay, in other words, trading inventory. So then we say to ourselves, okay, cool. which accounts are affected? We know drawings is affected. We know trading inventory is affected. But then there's another account that's also affected. When we first bought this trading inventory, we claimed input VAT. But now since this owner, Andile, is just coming here and is taking this stuff for himself, we then need to say, hey, that input VAT that we claimed, right? Because we said we're going to sell this trading inventory. SARS is going to want that input VAT back. And to give them back that input VAT or counter or reduce or remove that input VAT, we then need to do output VAT transaction. Does it make sense? So what's going to happen with drawings? Drawings, we know we're going to debit it, all right? Because whenever drawings incur, whenever we incur drawings, we debit it, all right? I'm sure we remember this debt click thing, all right? That's what we do. Drawings, we're debiting, okay? Then the next thing, we know that trading inventory is going down, all right? Remember, trading inventory is an asset, it's going down, so we're going to credit it. So here we're going to write trading inventory, okay? Then finally, output VAT we know is what? What is output VAT? Is it a current asset or current liability? It's a liability. So what are we going to do with that account? We're going to credit. Can you see why we did so many accounting equation exercises? And the first question I would always ask you is, which accounts are affected? Okay? So here we have output VAT. Okay, now that we know the accounts and we've written that down, we then say, okay, so how much are we going to be putting in each? Okay, we know that drawings, we put the amount exclusive of that. It's the cost exclusive of that. So here on the 6th, what do we have? They told us marked price, 2,500. So in other words, this is the price. Which price is this? Is this the cost price or the selling price? It's the 100%. It's the selling price. If they say marked price, they mean the selling price. So we then need to say to ourselves, okay, let's quickly draw a model. Here they tell us markup. Where am I? Yes, they say gross margin 10%. So we then need to draw a model. And what do we already know? Since this is gross margin, and they didn't tell us whether it's on price. Remember, the formula is profit over selling price. So what is selling price? Is what? Yes, rand amount, but I mean percentage-wise. Because remember, I want us to do this. I want us to do our model there. Selling prices are 100%. And we know profit is, if gross margin is 10%, then profit is 10%. Thank you there. Okay? Profit is then 10%. So what is cost? 100%. It is 90. Okay? Cool. So we now have our model. And we have this selling price. Okay? We have this selling price. So then we now need to calculate our cost price. So we say, okay, what we want is 90. What we have is 100. Okay? And then this 2,500. Remember they said assume all amounts are inclusive of VAT unless told otherwise. So then this is the cost that we paid. All right? We paid 2,250. Okay? So that is what we're going to debit. So drawings is the cost price inclusive of VAT. Okay? I think I might have said exclusive of VAT earlier. Sorry about that. Okay? Inclusive of VAT. Okay? Then we say to ourselves, inventory, we know it's the cost price exclusive of VAT. Okay? So can you see here, if you remember, I told you guys when we were doing VAT, if you don't know your VAT calculations, it's going to be a very, very tough road, okay, to say the least. Okay. All right. So that's now our cost exclusive of VAT. And why do we use the cost exclusive of VAT for trading inventory? Remember, when we first bought this stuff, we claimed input VAT. All right. So we're saying that's not a cost to us. It's a current asset. Okay. Right. So now we're reducing the amount of inventory we have, because remember the owner took this out. All right. He went home with this. Okay. And we're crediting. Our trading inventory is going down. Remember, we kept saying, is this increasing, decreasing? What's this is why, okay? Then finally, the output VAT, we can quickly just say, okay, what's the difference between the two? 2,250 minus what we just calculated, 17 gives us what? Okay. And you guys, you can do the calculations in the same spaces, like when you're doing your test or exam, or you can do them underneath. Okay, I'd only advise that you do them on the same space if you know it's going to be neat. Okay, if it's not going to be neat, then maybe you might want to do it on another section and stuff. But please do show your calculations, because if you get it wrong, at least I can then see, okay, they just messed up here or there, but then they had the right process. All right, maybe they just made a finger error or something to that effect. So I can at least be like, okay, cool, I can give them something. And then if ever they say with narration, okay, so I think I can actually go up. If ever they say in the question with narration, it's just now you saying what exactly is happening here. Drawings by owner. Literally, it's a phrase that you need to, and the phrase is literally just saying what is going on in the transaction. That's it. Okay. So try and not have more than 3 words when giving a narration. Okay. Cool. And there, don't worry. Some of you will say drawings of trading inventory. Okay. It doesn't matter as long as I can see you understand what is actually taking place. So I'm not strict on the narration. I just need to know you know what's going on in the transaction. We're good. Okay. Then on the 27th, for the GJ, that was, if you look there with B banana, the full settlement, the full payment of account, 10% discount granted. Okay. So what we then need to say to ourselves is, can you see they didn't give us an amount? You can see there's question marks. So what we then need to do is we need to go to all the places where we have B banana and establish how much it is that was owed. Okay. How do we then do that? We have to do it the hard manual way of looking for B banana. First transaction I see with B banana happened on the 7th, and that was for, I'm just going to use my pen underneath here, 14,400. Okay. He was buying from us. Okay, so this is a debtor. 14,000, and then the next date was on the 17th. And on the 17th, we had 2 transactions with him. One, he was returning goods. Oh, sorry, there was a damaged merchandise, so he was returning goods. So that's minus 990. Then on the next date, he was purchasing more goods for 7,400. Okay, and here, guys, make sure that you're dealing with the same amounts. All right. So when I say the same amounts, I mean all amounts should be inclusive of that, or all amounts must be exclusive of that. Does that make sense? It will just make your life easier. Okay. Then if we, is there any other transaction if we, nope. So then the last transaction is now the full settlement. Okay. Oh, so this should be a plus, because yes. Thank you so much for that. Okay, this should be a plus. Okay, then Somebody tell me what's the total of what he owed us? Because remember, this is a debtor. This is someone who owed us. What's the total? 20,110. 810. Okay, cool. So now we know how much was owed. But remember, we gave him a settlement discount. So if you were doing the cash receipts journal, which we said we're not doing today, you would then say, okay, the money that was received by him, whether it be by check or actual cash, it's going to be, how much was the discount? 90%. So this is, sorry, 10% was the discount. So 90% is what he's going to pay us. Okay. But what we are interested in the general journal is the 10% discount. So then we say, this is for the cash receipts journal. Okay, very important. And this 10% is what we're interested in the general journal. So 10% of that, I would imagine, should be 2,081. Okay. And we know this is the VAT inclusive amount that we're playing with here. So we then say, okay, we have that. Now we have to ask ourselves, which accounts are affected? Now, when we're doing a settlement discount, we're reversing what we did initially. So initially, we were selling to this person on credit. So we know debtors is affected, we know sales is affected, and we know output VAT is affected. Because whenever we make a sale, we know we owe SARS money. So since what we sold to him, we're reducing what we sold to him in essence, because we're giving him a discount. That means debtors is going to go down. Sales is also going to go down, right? The amount of money that's coming to us. And then finally, because we said output VAT based on 20,810, we're then saying, no, actually we didn't sell for that amount, we sold for 90% of that amount. So then we need to then do input VAT. Okay. So then we say, okay, debtors control is decreasing, so we're going to credit debtors control. Actually, let me do that one last. Okay, so sales is going down. So I'm going to debit sales. Okay. Input VAT we know is a current asset. Okay, remember sales is an income. So just so we know incomes increase on the credit side. Okay. So since sales is going down, we're going to debit it. I just want us to understand the logic. Then we know we have input VAT. Input VAT we know is a current asset. So what are we going to do? We're going to debit that because that's increasing. Okay. In order to reverse the output VAT. So input VAT. Okay. Then finally, debtors control we are crediting. Because remember, this is going down. And debtors control again is a asset control. Okay, so we know that for debtors control, as in the journals, is VAT inclusive. So even here in the general journal, we're going to use the VAT inclusive amount. Okay, so we're consistent. This is the nice thing about accounting. The principles are consistent. Okay, so even like I've even had students correct me for wrongly debiting or crediting an amount. Because the principles, it doesn't matter whether who you are or what, it's always going to be consistent. Okay, right? All right. And by the way, just on the side, because I saw some of you looking at me like, what? They corrected you? I really don't mind being corrected because, like I said, I'm here to learn from you guys as well. We don't know everything, believe it or not. Okay. So yeah, be nice about it though. But honestly speaking, if something doesn't seem right, ask me about it or correct me if I'm wrong. That said, under sales, we know we're going to use the VAT exclusive amount like we did in the journals wherever we had sales. So we're saying 100 divided by 115, and then again 81. Okay, and that gives us, sorry, my cursor's in the way there, Zero way. Yes, but remember that's for the cash receipts journal. Here we're operating in the general journal. We're only interested in the discount in the general journal. Does that make sense? We're going to reverse. Here, remember he hasn't yet paid us this amount. All right. So what we're going to record in the, actually let's calculate. So 90% of 20,810 is what? Just so that we get the full picture of what's going on here. And I'm going to do this in a different color. Should be about maybe 18,000 something. 729. Okay. So like I said, this 18,000 is going in the cash receipts journal. Okay. But now the challenge that we have is this 20,810 needs to be reduced. Okay. Because initially that's what we've quoted him for, right? After his returns and everything. But we know that we actually gave him a 10% discount here. Okay. So this is how much he's actually settling for. And so this is his 10% discount. And can you see what we've done? In the debtors journal, or in the debtors control, we entered this amount when we first sold to him. Does that make sense? But now that needs to be reduced. So we can only do that in the general journal, which is what we're doing now. Can you see here we're crediting debtors control. 2,000, the discounted amount, basically. Makes sense? So that's exactly what we're actually doing. Okay, now you with me? Okay, cool. So then, sales is going to be the exclusive of that amount which we calculated. So that's perfectly fine. So we take that 1,800, plug it in on the debit, and then to 2 decimal place, that'll be 57. Then obviously, input VAT will be the difference between the two. Up. So 81 minus, let's do this, 52. Okay. So that'll be the input VAT that we are now claiming to reduce or rectify the output VAT that we initially wrote in. All right. Everybody good? Make sense? Okay. Right. And again, can you see what we learned in terms of double entry taking place? Our credit is equal to our debit. Does that make sense? So that's another quick way just to check, did I do things right? Did I maybe miscalculate something? All right, then last one. This time it was a, yes? You don't get a formula sheet. No, you don't. But what you do get is, you will get the actual books written out for you. So for example, your debtors journal and all the titles of the columns will be written in for you. Yeah, things to that effect. But they won't actually give you a formula sheet with this. Yeah. But it's easy stuff, isn't it? We know all these things. Facts, all these things, we know. Okay. All right. So 31st. That was with Upland Wholesalers. Payment in full, 5% discount received. Again, there's an error there. Should be received, not granted. Cool. So again, they haven't given us the amount. So again, what do we need to do? We then now need to calculate how much did we, oh my goodness, how much did we owe these guys when we settled? So we look for everywhere where we see Upland Wholesalers. Let's see, where do we first see these guys? 24th. Yep. And that was, we purchased equipment. That was for, let me, yeah, am I using, I'm a different color? Okay, I am. All right, so just want to shift this down So that was 25,600, if I'm not mistaken. Yes. Then we go and we look for the next transaction. Can you see on the 25th there with Upland Wholesalers? We returned damaged equipment. That was minus 4,000, or that's going to be minus 4,000. Then we don't have anything else with them. Okay, yeah, we don't have anything else with them. So the total of what we owed them was then 21,600. Then again, they told us that there was a 5% discount. So it's the same procedure. We're then saying, okay, so how much did we actually pay these guys? Okay, how much did we actually pay these guys? So we're saying 21,600 is what was owed. There was a 5% discount. So percentage-wise, how much are we actually paying them? 95%. So 0.95. And what do we get when we calculate that? 3,520. Okay, perfect. Where is this going to be recorded? This payment of 20,500. The CPJ, 100%. Okay. So we're not doing the CPJ, but I just want us to be aware of that. So here, CPJ, because in the test or exam, you might actually be doing the CPJ. So you need to know. Okay. But then what we are interested in, again, is the discount, because the discount needs to be recorded in the general journal. Okay, another way you could have calculated this is just saying the 21,600 minus the 20,520, and you would have gotten the discounted amount, which is an 80 rand. Okay, cool. And this is for the general journal. Let me just write that out a little neater, which is what we're doing. Yes. No, they'll never ask you this many transactions, and this is why I wanted to ask you this. Because if I do this, if I do the harder exercise with you, then exercise 20 is going to be easy. So they might just ask you the cash receipts and they could say cash book receipts, debtors journal, and then maybe do the creditors allowance journal. Can you see we're testing? Because if you don't know what the creditors journal is, you can't do the creditors allowance journal. All right. And so literally they could ask you any of those. They could ask you to do the cash payments journal, the general journal, and the creditors journal. They could ask any of them, right? They could even ask you to do only 2 journals and then give you general ledger accounts. So for instance, they might even make it a bit easy for you. They might say, just do the cash receipts journal and do the cash payments journal. But then they now give you, we also want you to do the bank accounts, trading inventory account, and maybe do the creditors control account. So can you see they could really just, that's the reason why I say with accounting, there's no shortcuts. We will know if you know your story or not. Because somewhere along the line, you're going to get caught. Okay? So the easiest way is to just make sure you know your story. Okay? The good part, and I probably have said this to you guys before, is that this is the one subject, when you get to the exams, you won't actually need to study for. Because you've been doing all this practice, you understand what's going on, and if you are practicing, it'd probably be just past papers. You won't be going through the exercises because you're like, nah, I understand them, I understand the principle. So now it's just about polishing up to see the type of questions that they ask in the test or exam. Because the reality is we can't ask you these long questions. But we have to test you on all these 9 units. Does that make sense? So, you know, it's better to understand it now, because there are some people, and this is a few people, that they can actually be like, okay, we've got a month and a half towards the exam. Let me get serious. I've been playing all semester. And they'll actually pass. But they obviously go through a lot in terms of, obviously now they are, you know, really working a 9 to 5 there. All right. And so most people just feel overwhelmed and they're just like, you know what, accounting is not for me. But you weren't practicing the whole semester. You weren't doing the homework when sir said do 1, 2, 3, 1, 2, 3. But anyway, to answer your question, they won't ask you all these transactions. They won't. Yeah. Whenever you guys get close to a test or exam, what I would advise is go through the past papers to get a feel for what they would ask. And based on how you answer those or how you tackle those questions, you'll get a nice feel for, am I ready? And if you aren't, then obviously just go back to exercises and then hash it out and see where you're not where you need to be. Okay, again, here we ask ourselves, which accounts are affected? We know when we bought from these guys, it was creditors control, then it was input VAT, and then finally, what was the other account that was affected? Not sales, it was, what did we buy from these guys? Equipment. Okay, most of the time it would probably be trading inventory, but in this case, it's equipment that we bought from them. So it's equipment, creditors control, and then what is the input VAT when we initially did the transaction with them. But now we need to reverse that input VAT, so it's going to be output VAT. Okay, so then we say to ourselves, okay, what's happening with creditors control? Creditors control is going down. All right, so since it's going down, what we need to do to creditors control is to debit it. Okay, creditors control. Okay, we're debiting that. Then we know that output VAT is a current what? Asset or liability? Liability. So what are we going to do there? What are we going to do with output VAT? We're going to credit output VAT, okay? Okay. And then finally, which account we said equipment is also going down, okay? So we're going to credit equipment. Okay, right. So we calculate the discount. The discount was at 1,080. Again, in the creditors, wherever we had a creditors column, we use the VAT inclusive amount. So here again, we're going to use the VAT inclusive amount, which is the 1,080 that we calculated together. All right, then we say to ourselves, what is the VAT amount? We're saying VAT amount, you know, it's 15 divided by 115 times the amount here, and that gives us 8. Why doesn't it want to calculate this? Oh, okay, I know. Need to make a space there. There we go. Okay. Oh, that's actually being credited, so sorry. Should be there. And it's 7. Okay. And finally, here we want the VAT exclusive amount, so 100, 115 times 180. And there we go. Okay. And we're done, guys. Okay, and you can quickly check there, does my debit equal my credit? And it definitely should. Okay. Are there any questions? Concerns, worries, celebrations? Maybe. Okay, so when's the next time I see you? Let me quickly, so I just want to, oh, sorry, no, don't need to. You say it's Friday? Okay, this week?